And that was a good scary headline. Again, it didn't affect our housing market dynamic, which was released after shutdown ended. Recession, what recession? Now over, growth is reviving, and Sydney is the leading economy. What else is new? And it has been pre-COVID. So this is our GDP. Now, of course, this was the June quarter, which was COVID, and that was a shocker. Record drop in growth, economic growth, down 7%. But you think about it, we only fell by 0.3% in the March quarter. So that was sort of almost flat. So the recession, which is supposed to be 2 consecutive quarters of negative growth, yes, we had that, but one of them was 0.3%, for goodness sake. So really, okay, officially a recession, but it was just one big, falling through the floor in one quarter. And since then, we've just about recovered everything we lost in June, right? So it's like, again, these are black swan events. We don't look at them and analyse them in terms of being some significant structural problem for our economy and our housing markets. They just come out of the blue and then they're gone, because Australians adapt and adopt and move on, and hopefully stronger than ever. So, and other factors, of course, show us how we're performing, how our economy's recovered. Our share market's just about back to where it was pre-COVID. And that, of course, is a reflection. And look how sharp our share market fell during the peak of the shutdown. But again, this reflects local investor sentiment. People are buying shares again. The All Ords is rising. All right. And of course, this is quite spectacular. This is the dollar, which has gone through the roof, more or less. It's quite interesting. So our dollar is now at 3-year highs. It's the highest our dollar has been for 3 years. Now this is international to some degree. US dollar's been weakish, but to some degree this does reflect international's interest in the Australian economy. It's not just the dollar coming in because our interest rates are higher than everywhere else, which was the case 3 or 4 years ago. It's now about attracting international investors because of the strength of our economy. Our poor old Reserve Bank governor, and this isn't a session to bag him, which we've done a few bits, but anyway, you get the big money, you've got to, earn it. So way back here, the Reserve Bank governor said that they were going to engage with some monetary policy initiatives, quantitative easing, and one of the accelerate those policies. And one of the reasons the Reserve Bank governor gave for doing that was because he wanted the dollar to fall, right? And since then, the dollar's gone through the roof. You never tell the markets, if you're the Reserve Bank, right, where you want the dollar to go, because they'll start making sure, because they think it's going to go down, I'm going to buy, right? And they start creating a margin between the perceptions and the reality. So it's gone. And again, the Reserve Bank governor said during the week that he wants to see the dollar lower. So I would expect that to be back at 80 cents anytime soon. But over and above that sort of rubbish, it does reflect again the perceptions internationally of the Australian economy, that our dollar is so strong. Again, there is some weakness in the US that drives that, but we've certainly recovered since our pre-coronavirus position. So what I'm saying is that in terms of the economy, we don't have any issues, even if there were fundamental issues connecting the economy, and it is in regard to interest rates, as it will affect our housing markets, right? We forget about that, right? So, Sydney, again, lowest unemployment rate of all the capital city markets, right? This is raw January number, which is always higher because it's not seasonally adjusted, but we can look at it compared to the other capital cities, and Sydney has the lowest unemployment rate, which traditionally it owns the strongest economy in the country. So, Sydney is the nation's premier housing market. Well, I've lived in Sydney for 11 years, I would say that, maybe I'm a Sydney-sider now. But do you reckon it's the premium housing market? Well, I'm going to prove that. You don't believe it, because have a look at the house prices, which we all know, of course. And these are the current extrapolated on that 4% growth that I mentioned so far this year. Sydney's median house price is now well above $1.1 million median house price, and you can see where it's situated compared to the other capital city markets, right? Brisbane's still tracking double the Brisbane market and everywhere else, and still significantly higher than the Melbourne market, right? And that relationship has been maintained over the longer journey. So obviously, you pay more for something. I mean, this is the Bentley, and this is the, what will we call Melbourne? No, not a Mercedes. The Volkswagen, yeah, that's right. Yeah, good, reliable German car. So there we go. So, and of course, apartments are exactly the same. Median price for Sydney apartments is $750,000. So I guess it's the old saying, you get what you pay for, right? But certainly you pay more for Sydney in terms of its premium focus. So this is quite interesting. Let's have a look at house prices. So we've seen absolutes, right? And what the value is compared one to the other. Let's have a look at how house prices have grown since the GFC in each of the capital city markets. So by since the GFC, I mean at the peak before the GFC hit us. That's when we're all sort of on the same page. So you can, depends where you obviously start your measure when you want to compare prices, because some housing markets perform faster than others at various periods of time. Same for the share market. But if we use this position, which is just prior to the GFC, it's about more of a common period before it all sort of went down. So since then, Sydney house prices have doubled since the GFC, prior to the GFC. Melbourne up 85%, and really the others have gone nowhere. And look at the share market performance. Share market, the All Ords is up just 1.3%, right, in the last 13 years. And Sydney house prices have doubled. And you can see unit prices are up, obviously not as much, and as we said, there are other issues with the unit market, particularly in regard to supply recently, although this hasn't really impacted that, because unit prices are typically always lower than house prices because of lower levels of demand. But you can see the difference between the unit price and the house price is a lot closer in Sydney than it is in Melbourne, right? And in Brisbane, and similar in Adelaide. So I think that's another validation of Sydney as the premier housing market in the country, right? Buyer types. Now, this is one other thing I want to refer to. So this is the home loan data from the ABS, and this shows us who's buying at the moment, nationally, all right? Now, these are owner-occupiers, right? We have never, ever, ever seen so many owner-occupiers having home loans approved. These are record, this is what I said, not joking. The banks are having trouble servicing the demand from owner-occupiers for applications for home loans. Owner-occupiers. So, the black line are investors, right? That's a very sad story, because these are the implications for those restrictions that started here on investor activity, again here, and you can see how that has crushed investor activity in our housing markets. It's because it was a credit squeeze, because there's been a cultural shift in banks in terms of their attitude towards lending to investors, which was exacerbated by the APRA actions and then by the Banking Royal Commission. It is very difficult for a developer or an investor still to get finance, right? Rates are higher than owner-occupiers, and you know, this is a consequence of those actions that crushed investors and those cultural changes to banks, which became entirely risk-averse to investor lending. And that is not a good thing, because investors should face the same criteria for lending as owner-occupiers. But having said that, in terms of the regulator, the point is that if all the demand is from owner-occupiers, then notionally is lower risk than if back in the old days we had strong demand from investors. Do you understand? The lesson we have from housing market history is that owner-occupiers will do anything to hang on to their house, right? We learned that back in the recession 1991, and that's why all the then commercial banks switched to housing, because they realised that that was you know, the roadway to gold, because owner-occupiers, Australians, will do anything to hang on to their house. And we know that because when we look at issues such as mortgage defaults and arrears, they remain and have remained at significantly record low levels, right? Even through COVID, where they were given some assistance. So what I'm saying is that even in terms of perceived risk in our housing markets, it would come from that black line, being too many investors, right? We have way few. In fact, the market share for investors now of the total lending is the lowest it's ever been, 19%. So of all lending now, 19% is going to investors, which is the lowest market share ever. And the grey here are first home buyers. And can you believe there are now more first home buyers in the market than investors? Never had that before. We've never seen more first home buyers than there are investors, because investors typically are the enemy of first home buyers because they crowd them out. They're bidding for typically the same place, and they turn a first home buyer into a tenant, if you understand, through that competition. But we've never seen that before. So again, this is reflecting the risk profile of our housing markets because there's so few investors in the market, right? And that's what's driving prices so strongly, is that it's that changeover owner-occupier. And New South Wales is the top for home lending, considerably the top for home lending over January, 9.6 billion, way ahead of anyone else. So let's have a look at the supply side of the equation. Now this is important. We're sort of getting to the end of this, I think. Yeah, really? Yeah, no. So I said about the supply scenario. So this is the supply into Sydney, right, of, these are building approvals, right, from ABS. And you can see the peak back in 2017, 42,000 units approved in 2017. We're now under 20,000 units last year. Houses, like I said, we're just sort of bumbling along. Even with the home builder initiative, right, the $25,000 deposit, we've only just really jumped up a little bit in terms of new house building in Sydney. And that's because we don't have anywhere to offer people who want to build a typical outer suburban house. There's nowhere to go. Camden, Goulburn, right? That's about it. And so Sydney's a higher density destination. And this is the point here, even though now we have peak supply now easing, there's nothing coming in behind. We stopped building. We are down 94.2% in number of properties approved since 2016. So if we hadn't had the COVID border shutdown issues, which have impacted demand, right, we would now be starting to seriously face an undersupply of property in Sydney, a shortage of places to live. And this is quite a serious problem because and that's because of those interferences in investor activity, which drag this down, right? And I don't want to get sort of too dramatic about this, but we know it can happen in Western advanced cities where you get an undersupply, a chronic undersupply of property. What can mean for social issues, and particularly social housing. Just have to look at some of those American cities, what they're experiencing. I'm not saying Sydney is heading there, but certainly it's going to take some initiatives to reverse what is this shortage of property going forward. And that, of course, means that Sydney will remain that premier housing market because we're undersupplied. And now it's just a pause in that inevitability of undersupplying this market and having housing shortages. See, Sydney's got nowhere to go but up. That's the whole point. We have the Hawkesbury River, we have the Blue Mountains, we have the Pacific Ocean, the national park, so you can only funnel out to the southwest, and we're already down to Camden, which is 80 kilometres away, right? And that's why they created Parramatta as a second CBD, so it could split Sydney. So that's why people who are particularly looking for traditional inner suburban or Sydney suburban locations are looking at apartments, right? I'll have a bit more to say on that shortly. So, undersupply, right, in the Sydney market, and that's worse than any other position of any other capitals. And this just shows that the approvals, annual approvals to January, and Melbourne's booming, but in houses, the big difference is that Melbourne's got that spread, and Brisbane's just below Sydney, and Perth's just below Sydney. It's because they've got places to spread on the fringe, whereas Sydney can't do it. My point is undersupply going forward. once we rebalance our economy, particularly with international borders opening, we will move towards the inevitability of having a shortage of housing in Sydney. And the only way Sydneysiders can go is up, and Sydney has embraced higher density living at a much higher rate than any other capital city for a number of reasons, and we can see them out there because there's that wonderful harbour and the beach and all those sort of things that we want to get close to. So we've gone up, but now we've just run out of space on the fringe, so we have to go, right? And one of the things that is interesting, I'm going to do something for one of the TVs next week, is that this is now the time, the perfect opportunity for downsizers and empty nesters to look at that apartment in Sydney, because they are going to get the best price they could ever possibly get for their lower northeastern suburbs, upper north property, right? And then start looking and being in a strong position to buy and have good choice of properties. And that will act to soak up a lot of the apartment, particularly the higher quality apartments in Sydney quickly, right? And of course the other thing is they've got plenty of buyers, not just from locals, but we've got a flood of expatriates coming into Sydney at the moment, around 30,000 expected this year to come into Sydney, right? Now they're here to stay, and most of them are cashed up and looking for those family-friendly suburbs, leafy suburbs, or